Hi there, welcome to Nepi Invest. It has been about 1 year since I last did a video on Volpara. A lot of things have happened in the past year, maybe not with Volpara, but in the world itself, in the investing world. We have seen a significant correction in the market since then and a little bit of rebound in the last few months. But in today's video, we are going to have a look at Volpara September quarter pennies 4C. The last time I did a video, we had a look at the September quarter pennies 4C for the financial year 22 quarter. Now we're going to have a look at the financial year 23 quarter. And I just want to see how this company is progressing. I am interested in what this company is doing, but just because I like what they do doesn't mean I'm going to invest in the company. Before we get to Volpara's, the pennies 4C for the financial year 23, there are a few things I want to get through. First of all, just a few facts in regards to the company. Volpara have created software for the screening of early detection of breast cancer. So this is one of the reasons why I do like this company and hope this company is successful with what they are doing, because it would be beneficial for humanity, particularly for women and even women's families. You don't want your mother, your wife to die early from breast cancer. So hopefully Volpara are successful in what they are doing, and hopefully that success leads to those benefits for women around and families around the world. Volpara was founded in 2009. This is a New Zealand-based company and listed on the ASX April 2016. The current CEO and co-founder is not Ralph Wiggum, it's actually Ralph Highnam. So every time I see his name, I just think of Ralph Wiggum from Simpsons for some reason. He owns 6.4% of the company, and the largest shareholder of Volpara is Harbour. One of the largest shareholders is Harbour Asset Management. This fund management company is, I believe, based out of Wellington, founded, if I remember correctly, in 2009, and they own 13.1% of Volpara. Now, the current market cap of Volpara is 159 million. That's at a share price of 63 cents. Last time I did a video, almost 1 year ago, the market cap of this company was 280 million. And that's at a share price of $1.11. So this company's share price and valuation has taken a hit over the past year. That shouldn't be a surprise to most people out there, because Volpara is a health technology company. Technology is the most important word there. That is not profitable. And technology or non-profitable technology companies have been the sort of companies that have been hit the hardest in the past year. And Volpara's ticker code is VHT. Now, before we get to the financial year 23 September quarter for Volpara, I'm going to go back 2 years and then I'll go back 1 year. So we have 3 years of September quarters I'm going to show you here. So I just want to see how this company has progressed in terms of receipts and also in terms of operating cash flow. So I just want to see if this company is moving towards a really important inflection point, an inflection point that I'm looking out for, and that is becoming operating cash flow positive. And once they become operating cash flow positive, I want to see the company become free cash flow positive, because if the company can achieve that on an ongoing basis, they won't have to raise more capital for the day-to-day business of the company. So let's have a look at the September quarter for financial year 21. Receipts of customers, 4.7 million. This is in New Zealand dollars. And they were operating cash flow negative by 3.5 million. So hadn't reached the inflection point just yet, but they did have $64.3 million of cash on hand. So they had a lot of cash to play with. So they could still keep burning cash without doing any capital raisings, unless, of course, they did an acquisition. So let's have a look at the September quarter for the financial year 22, just to see how this company progressed in the following year after release of this particular Appendix 4C. And as we take a look at the next quarter, the September quarter for financial year 22, things seem to be moving fairly well for Volpara, particularly in terms of cash receipts, up $2.5 million from the previous quarter to $7.1 million. The other more important thing is costs weren't quite increasing at the same rate as the increasing receipts, up only about 1.8 million or something like that, which means the company was not quite as operating cash, or didn't have quite as much operating cash outflow than the previous quarter, but still over $3 million of operating cash outflow. And the other thing to take note here is the cash on hand has significantly fallen from the previous year, down from over 60 million to 25 million. There could be a few reasons from that. I haven't really delved deeply into why the cash on hand had fallen a fair bit. Maybe the company burned through a lot of cash in the previous 3 quarters, or maybe the company made an acquisition. But the main thing here is, unlike the previous quarter where I was satisfied with the cash on hand and this company wouldn't have to do a capital raising anytime soon, I'm not thinking that quite now. In fact, with only $25 million of cash on hand and the burning of cash in their operations, financing activities, and investing activities, there's a higher chance the company would need to do a capital raising within the next few years. And as we move along to the September quarter for financial year 23, the last quarter, things seem to be moving okay in terms of cash receipts, up to 8.75 million, increasing 1.6 million from the September quarter the previous year. Unfortunately, spending is actually increased a little bit more than cash receipts increase. In fact, research and development up 400,000, product manufacturing and operating costs up 200,000, staff costs up 600,000, and administration costs up 300,000. And that means, because the increase in spending was greater than the increase in cash receipts, that means the company was more operating cash negative in this particular quarter than the previous quarter. So the operating cash outflow for this quarter is 3.17 million. And the most concerning thing for me with Volpara is the cash on hand down to $11.6 million. So I think there's a high chance that Volpara will have to do a capital raising within the next few quarters if they don't control their burn or cash burn rate. If we take a look at the cash receipts history for Volpara, going back to 2016, so this is about 6.5 years of cash receipts. This is exactly what you want to see for a company that you have invested in. Receipts going up through time, particularly from about 2018. So it seems like between about 2016 and 18, receipts were going sideways. They were less than $1 million per quarter, but we have really seen receipts take off in the last 4 years, increasing from $1 million all the way to a current receipts level of $8.8 million. So this is exactly what we want to see. And for those who haven't heard me say it, revenue or receipts growth, so we'll talk about revenue growth. Revenue growth is the best predictor for outperformance of a company's share price. Research has been done on this, and it is actually revenue growth that is the best predictor, and I'll repeat again, best predictor for a company's share price to outperform the market. And that's why we prefer to be stock pickers than just invest in ETFs, because we want to invest in those companies that are growing and that can outperform the market. So things are moving in the right direction for Volpara in terms of receipts. We want to see receipts growing through time, and that is exactly what is happening with Volpara. Now, one thing I want to know about Volpara, and you can find this information either in the half-yearly or the yearly financial statements, usually found in the notes, is from where is their revenue derived? Because they recognize revenue under 3 main contract types: software as a service contracts, software maintenance agreements, and capital sales contracts. And they've also broken it down into geographic regions: North America, Europe, Middle East and Asia, and Australia and Pacific. Not sure why they break down the revenue into geographic regions, because by far the majority of their revenue is from North America. In fact, $16.3 million of the revenue is North America out of $16.9 million. $579,000 of revenue in Australia Pacific, and only $33,000 in Europe, Middle East, and Asia. And if we break it down into their contract types, $11.4 million of the revenue is through SaaS, and that's in North America, or $11.9 million throughout the world, and $3.3 million in software maintenance agreements, and $562,000 in capital sales contracts in North America, $659,000 the rest of the world. So it seems like the company's management have really focused or honing in on North America, because more than likely they believe that is where the market is for this type of business right now, and they can have the best chance of success if they focus on North America. Now let's have a look at the charts for Volpara. I'm going to look at 2 charts here. The first one is the weekly chart. without any moving averages, just some candlesticks or weekly candlesticks here, going back to 2016 when the company listed on the ASX. And really, from when they listed on the ASX all the way through to just prior to the COVID-19 financial panic, this was a success story on the Australian exchange because the share price increased from about 44 cents all the way to a high of about $2.18. And then COVID-19 happened. And even though share price fell all the way down to about 80 cents or so, we saw a nice rebound, the share price going back up to about $1.70. But from that high, or the next high we saw of $1.70, which was reached in the first month of 2021, the share price has been consistently falling since then, a well-defined downtrend. And in fact, the share price has fallen to a low of around about 40 cents, which was reached in June of this year, where we did see the bottom in the ASX. Share price has rebounded back up to around about 63 cents right now, but definitely a lot of negative sentiment in Volpara right now. I'm just waiting for a bit of a swing in sentiment or shift in sentiment, a bit of a shift in the share price trend, and hopefully that shift in sentiment, change in the trend of share price coincides with some good positive financial news from the company. I would prefer Volpara to be very near operating cash flow and free cash flow positive. So that is the one concerning thing for me in regards to Volpara, is they are burning through a lot of cash and there is that chance for a capital raising soon. And one thing I didn't show you in the previous chart is just the decrease in volume we have seen in the past 2 years, which is telling me the market is not that interested in this company right now. And of course, the best way to change or generate interest in the company is for some really good financial news from the company. An operating cash flow positive quarter, free cash flow positive, profitability, something like that would generate interest in this company. And if we take a look at the daily chart here, going back to July 2021, there was a small or short period of time when there was a bit of interest in this company. And the reason why there was an increase in interest in this company in the latter half of June was because the share price reached 40 cents. And I just think there were participants in the market at that point, or that share price, who thought Volpara was good value. And then we saw volumes drift away again, fall away. And the reason it fell away is because the share price went on a run. And those people who thought Volpara was attractive at 40 cents did not think the same when the share price reached 72.5 cents. And the share price of Volpara has really struggled to get above 72.5 cents. So that's a really strong resistance level for this company. If I see share price moving above 72.5 cents, and that breakout coincides with some good financial news, that would be a really good potential buy, a breakout buy for Volpara. But I need to see that good financial news before I become excited with this company right now, because share price seems like it wants to go sideways. It's trying to get into a consolidation period, and the best way for the share price to get out of consolidation period to break out to the upside is good financial news. I can't say that often enough. Good financial news is the best news a company can release. That's all I have looking at Volpara September quarter Appendix 4C for their financial year 23. If you have any questions about this company, if you know a little bit more about this company, you want to add any value to the Volpara story, just leave your thoughts, your opinions in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.